In 2009, something extraordinary happened, but barely anyone noticed. A mysterious figure named Satoshi Nakamoto released Bitcoin, the world's first decentralized digital currency. No one knew who Satoshi was. No faith, no identity, just a white paper, some code, and a dream to disrupt the world's financial system. While Wall Street was recovering from the 2008 crash, Satoshi quietly mined the first block, called the Genesis block. In that block, a hidden message. The Times, 03 January 2009, Chancellor on brink of second bailout for banks. It wasn't just code, it was a statement, a warning. Bitcoin was born not just as a currency, but as a rebellion. But back then, it had no value, zero. Yet within months, some believers started trading it. 10,000 Bitcoins were used to buy 2 pizzas. That's over 600 million today. You won't believe what happened next. By 2011, Bitcoin caught the attention of early internet adopters and libertarians. But something darker began to brew. The infamous Silk Road, an online black market, started using Bitcoin to enable anonymous transactions. Suddenly, Bitcoin became associated with crime. Headlines screamed, "The currency of criminals." Governments took notice, but behind the scenes, something else was happening. Venture capitalists and tech pioneers were taking it seriously. Peter Thiel's Founders Fund and Andreessen Horowitz started exploring crypto. While the media called it dangerous, smart money quietly moved in. In 2013, Bitcoin crossed $1,000 for the first time. But just when people thought it was unstoppable, Mt. Gox, the biggest crypto exchange at the time, was hacked. 850,000 Bitcoins vanished. The price crashed. Crypto was declared dead again.
Oh, while the Silk Road's collapse painted Bitcoin as the currency of criminals, another movement was already brewing. One that would shift the narrative entirely. Behind closed doors in university dorm rooms, a new generation of coders wasn't interested in crime. They saw Bitcoin as just the beginning. These weren't anarchists, they were visionaries. They weren't asking how to buy drugs with crypto. They were asking, what else can this technology do? What if money was just the first use case of blockchain? What if we could build apps, decentralized, uncensorable, trustless, on the same technology? The world hadn't seen it yet, but the future was knocking. And it came wearing a very different face. One far younger than anyone expected. The shift from digital cash to programmable finance was coming. And it all started with a 19-year-old boy and a bold idea that no one took seriously. At first, but crypto didn't die. In fact, it evolved. Ethereum launched in 2015, created by a teenager named Vitalik Buterin. Unlike Bitcoin, Ethereum wasn't just money. It was programmable. It introduced smart contracts, opening the door for decentralized apps, NFTs, and a whole new crypto economy. Venture capital exploded. Between 2016 and 2018, over $20 billion was poured into initial coin offerings, ICOs. Some turned millionaires overnight. Others lost everything to scams. Still, the industry matured. Coins like Ripple, Litecoin, and Cardano gained popularity. Exchanges like Binance and Coinbase rose fast. And quietly, institutions began paying attention. But the biggest twist? Governments weren't backing down. Regulations loomed. Would crypto survive? The answer came in 2020, when the world was on lockdown. As governments printed trillions of dollars, inflation fears surged. Bitcoin, once mocked, now looked like digital gold. Its price soared from $4,000 in March 2020 to over $60,000 in April 2021. Elon Musk tweeted, Tesla invested, and suddenly crypto was cool. Millennials and Gen Z poured in via apps like Robinhood and Coinbase. NFTs exploded. Bored Apes sold for millions. But behind the hype, real adoption was happening. PayPal enabled crypto payments. Square bought Bitcoin. Even Miami and New York raced to become crypto cities. But for every boom came a correction. The 2022 crash wiped billions. Luna collapsed. FTX, once the golden boy, imploded. Investors panicked. Was this the end again? Not even close. Because in 2023 and 2024, something shifted. Governments didn't ban crypto, they joined it. The US explored a digital dollar. El Salvador doubled down on Bitcoin as legal tender. Big banks like JP Morgan and Fidelity launched crypto services. Meanwhile,
Bitcoin halving events reduced supply, boosting scarcity. New coins emerged. Layer 2s, AI-integrated tokens, and green cryptocurrencies built for sustainability. The SEC approved Bitcoin ETFs. Wall Street went all in. And by early 2025, crypto wasn't just an investment, it was infrastructure, used in gaming, supply chains, identity, and finance. One report showed that over 420 million people now own crypto globally. From anonymous rebels to institutional giants, crypto's journey was never smooth, but always forward.